Hello and welcome to Gold Bull Report. My name is Kirsty Hogg, and joining us today from sunny Albuquerque, New Mexico is Mickey Fulp, the mercenary geologist. Mickey, how are you today?
I'm well, Kirsty. How are you?
I'm doing good, thanks. I've heard you speak about physical gold and silver ownership in the past, and I just wanted you to share with us, what is your philosophy on that?
I don't view gold as an investment or a speculation. I view gold as an insurance policy or a hedge against financial calamities. So I'm one of these people that think you should have a minimum of 10% of your net assets in physical bullion, specifically gold, and I think that needs to be in your physical possession.
Okay, I would have to agree with you on that. Now, how long have you been a geologist, and what attracted you to this industry?
I've been a practicing geologist for about 35 years. I went to college on an engineering scholarship, and about halfway through, after I got rid of all my math and science requirements, I decided I didn't want to work behind a desk punching a calculator or on a drill rig in the North Sea, so I basically decided I wanted to work outside, and I always liked rocks, so that kind of led me to be a geologist.
Okay. And I know that you get to travel around the world, and that must be quite an exciting thing, too.
It is, and sometimes it's adventurous, or it usually is adventurous. Sometimes it can be dangerous, but it's always exciting, and it's a pretty good job because you get to see the world at someone else's expense. So not very many people are able to do that.
The junior sector has taken a beating in the last several months. What is your macro overview on where it's heading?
Well, that's a good question. I wish I knew. And it's actually been more than a few months. The kind of midterm high was a year ago in early March, actually March the 4th. The Toronto Venture Index, which serves as a good proxy for the sector, hit basically a 3-year high at that point, and it's been downhill ever since. So we're pushing now almost a year and a half, and it was quite predictable that was going to happen in hindsight, because there had been a bunch of money raised and there was a bunch of free trading paper coming in from private placements, and so since then, we've seen a lack of liquidity. We are in a risk-off scenario. There's not a lot of people that want to take high risk, high reward. Where it's going, I've been saying since the early spring, it's got no chance of getting better until we get through the summer doldrums. We have Labor Day coming up in about a month, or actually about 3 weeks now, I suppose. And sometimes the market rebounds after Labor Day when people come back to work. I'm not sure that's going to happen right now. Commodities remain strong, but these junior companies have not performed very well. They have a tendency to overpromise and underdeliver, and I think that's caught up with the entire sector. We could be in for a long haul right now. At this stage, other than renewed interest coming back when more people are involved in the market after Labor Day, perhaps some rising commodities, but at this stage, most commodities remain range-bound. They have been for a while. So I'm not particularly bullish on the junior resource sector at this time.
Wow, that sounds pretty negative. Is there any hope for the sector in general?
I think so. There is reward in new discovery. So I know of at least 3 or 4 companies this summer with new drill discoveries, and they've reacted quite positive. So from that point of view, there is an appetite still for discovery, and as the earth continues to give up its bounty with drilling, I think that the fact that stocks have reacted is good. I've seen times in this business where it's been so bad that good drill results are selling opportunities, and at least this summer, good drill results have become buying opportunities.
Your website, Mercenary Geologist, I noticed that you have a lot of content, and there's some beginner's tips for junior miner investing called The Primer for the Lay Investor. Can you share one of those tips with our audience today?
Sure. One of the first ones I wrote was called Share Structure, People, and Projects. And those are the three key criteria I use to evaluate a junior explorer. And I should point out that very few of them are miners. And I view this as speculation, not investment. An investment is something that you are guaranteed, or you think you should be guaranteed a return. And these are very high risk, high reward speculations. That said, I evaluate companies with this three key criteria: share structure. I like a tight share structure. I want the principals to have plenty of skin in the game. I want a cadre of dedicated institutions involved, and never one institution which controls a majority block or a significant block of stock in the company, because then the management would be at the whim of that institution. The people need to be experienced in the junior resource sector. I much prefer that technical people, either engineers or geologists, are the CEOs. And most importantly, the management needs to have success in this sector. I don't consider an entrepreneur as someone who's bankrupted 3 companies. And we see that a lot in this sector, because the chances of success are quite slim, so you want to go with people who have had success in the past. And finally, the project, I very much want a company to have a flagship project, and that needs to be within the time frame, developable within the time frame of the average life of a junior, which is someone on the order of 5 to 7 years. It needs to be potentially a low-cost producer. It needs to have relatively low capital expenditure, because the junior has limited funds for capital expenditures for development. And finally, a junior needs multiple exit strategies. The old we're going to sell to a major doesn't work very often, so I want a project that's within the size range that a junior can either develop itself, joint venture it, sell it to a major if that ever happens, but an idea that you're not dependent on one exit strategy to be successful.
Excellent. Okay, I really appreciate that you have so much on your website with the beginner's tips for lay investors, because for myself, I don't really know a lot about the industry, and the fact that you've broken it down so clearly, and there's so much good information on there, it's really good.
Yeah, the real motivation here is, and I write mainly for the lay investor, and my motivation is the idea that for too long, the only people that make money in this business have been the insiders and the professionals, and the poor retail investor, who generally has a habit of buying at the top and selling at the bottom, usually has historically taken in the shorts in the junior resource sector. So my idea is, if I can educate the lay investor, make him a better investor, give him the ability to make better stock picks, then he's going to have larger chances of success. If he has success, makes money in the business, that increases the chance that he will continue. If he continues, that leads to increased liquidity and volume in the stock market, and we all know that increased volume leads to higher stock prices, so it ends up being a win-win situation for everyone.
That's very true. And how can we learn more, and where can we find you on the internet?
I run a couple of websites. I run mercenarygeologist.com, which everything that I do is available for free. I run a sponsor-based model, so I offer free subscription service. And I post all my interviews, my television and radio appearances, and all my writings are there for free. If you're an email subscriber, you get that stuff in advance of it being posted on the web. I also run mercenarygeologist.asia, which is in simplified Chinese because we're trying to reach a a very large that is very interested in the resource sector. And finally, all my interviews are run 24/7 in streaming audio on mercenarygeologist.fm.
Okay, looking forward to listening to that. Thanks for joining